Hey traders, David Frost, LazyGapTrader.com. In this video, I'm going to show you an example of a picture-perfect gap trade from this morning. I'm also going to show you another trade where sometimes a loser turns into a winner. I'm going to show you a couple of pitfalls to be careful of when taking certain types of these gap trades. What is gap trading? As day traders, we need opportunity. In order to make money in the market, we need stocks to be moving. That creates the opportunity. In the morning, there are stocks that are gapping higher or lower, whether it's a result of last night's earnings announcement, this morning's earnings announcement, or some other related news event. We don't really care why. All we care about is that stocks are moving and it gives us an opportunity to make profitable trades. So in the morning, a certain number of stocks are gapping higher or lower at the open. There's your big opportunity. The real opportunity is when traders can identify a specific price where these stocks will first be drawn to just like a magnet and then have a price reaction from in the other direction. The sneak peek is the one you're looking at on the screen, AAOI. We're going to get into more detail about this chart in just a minute. So as a result, I teach a course where traders learn everything they need to know in order to trade the gaps successfully. Which stocks does this work the best with? What type of volume do we look for? How much of a gap higher or lower in the morning are we looking for? How about how a stock comes into a certain price level? Most importantly, and here's the holy grail, in the course, traders learn exactly how to calculate these specific price levels where the stocks will first be drawn to and then have that price reaction in the other direction. After all, isn't identifying the proper support and resistance areas the holy grail? That's what this strategy teaches traders how to do as it relates to the morning gap trades. The other thing I do is give traders an opportunity to get my gap trade sent to them at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the opening bell even rings. As you can see, this one hit the inbox at 9:01 a.m. So this morning, we had 7 potential gap trades on the board. Out of this list of 7, 2 hit their specific price levels that traders who take the course learn how to calculate on their own. These are the same price levels that any trader that's taken the course is able to come up with before the opening bell even rings. We only want the highest probability trades on the board. That's why we're only interested in taking trades when a stock comes to the specific price level that we calculate. It's called waiting for the trade to come to you. Those are the high probability trades. So we're going to take a look at the charts of the 2 stocks that did hit their levels, go over them in detail. The first one was PZZA, Papa John's. Gap lower, support levels are $53.40, $50.92, and $48.44. Stop and profit target is about 35 to 65 cents. These are minimum profit targets. We'll talk about that more on the charts. In addition, when you see 2 or 3 support levels for a stock, these are separate and independent trades from one another. Each of these support levels should provide a level of support sufficient to get a profitable bounce or rally off that level on the stock. There are plenty of times where we get 2 and sometimes even 3 trades on the same stock in the same day off the levels given out before the market even opens. The second stock that hit its target today was AAOI. You saw that one already on the screen. We're going to go over it again. Gap lower, support levels are $30.70, and then I gave 2 more support levels if the stock were to continue lower. Stop and profit target is about 30 to 55 cents. Again, keep in mind, these are minimum profit targets. We're back on the chart of AAOI. You can see where the stock closed yesterday, all the way up above $35 a share. The stock was getting hit pretty good at the open. We came up with the highest probability support area was $30.70. That's represented by the horizontal line running across the screen. As you can see, the low of the day happened to be $30.66. The stock found support, took a rocket ride off that level, and went as high so far today, all the way up to $32.33. That represents a possible gain of $1.63 or over 5% from the entry price of $30.70 just minutes earlier. Now, the reason why I say minimum profit target is because in the course, there's an entire video module that teaches traders how to turn trades like this into risk-free, emotionless trades. Therefore, traders are learning how to take some profit along the way and how to squeeze the most profit possible as these trades unfold and move higher throughout the day. As you've seen on many of these videos on this channel, we do catch the low of the day quite often. Now, the next one we'll take a look at is Papa John's, PZZA. You can see where the stock closed yesterday at $58.69. The stock was getting hit at the open. We identified a level of $53.40 where the stock should find support. Unfortunately, the stock traded through that level by more than the stop loss limitation allows, making a low of $52.03. Now, a couple of things happen. First, technically speaking, it has to be booked as a loss because the stock broke the rules on the way down. Therefore, if traders are following the rules, they got stopped out. That happens. It's part of the business. We all know that. But there's a little twist here, and it's a good opportunity to learn something. Look where the stock is now. It's up around $56 as I make this video, significantly higher than the support level at $53.40. But what happened? Why did it go below by so much before snapping back? Well, in my book, there are two main reasons. Under normal conditions, the support level is good. The problem with this stock is, and you never know when this is going to happen before the opening bell, in some cases, when the spread on a stock is wide, it tends to go below or above, meaning below certain support levels or above certain resistance points, so they make it a little more difficult to trade. The second thing is, this is not necessarily a very high volume name. So if I go over to the daily chart, for example, you'll see here that it trades on average 894,000 shares per day. Now that's fine and it's within our parameters, but the point I want to bring out is the heavier volume stocks tend to spike through their support levels less frequently than the lighter volume stocks. Take a stock like Walmart, for example, trades millions of shares a day. The spread is narrow. It's unlikely it's going to overshoot a support level like you saw here on Papa John's. What do some of my traders do in these cases? They trim down their share size and they're prepared to buy the stock at a lower price, maybe at the next support level or in between the first and second support levels. And what that's telling you is they're confident in the support level, but as a just in case, they would like to have a wider stop, so they trim down their share size and they're prepared to average down a little bit. Those type of things are individual trader decisions, and individual traders need to be comfortable with the strategy and how it applies to them. So basically the bottom line is this. Once traders understand the why behind this strategy, understanding how it works and why it works is really the catalyst to removing the guesswork away from these trades and adding in confidence, because once traders understand the why behind the strategy, why and how it works, they have a different confidence level when entering these trades because they have a certain expectation of what should happen at these price levels. This is a strategy you can use each and every day for the remainder of your trading career. If you want to learn everything there is to know about trading the gaps successfully, come over to Lazy Gap Trader and check out the course. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.